CNBC-TV18.
Hello and welcome to a brand new edition of Inside Out on the Road, a show where we discuss individual stocks with in-depth analysis, deep dive into the financials and tell you about the key risks and triggers going forward. So let's not waste any time and get to our first stock today. My colleague Nigel gets us this very special deep dive on Orient Cement.
Inside Out on the Road has travelled to Hyderabad, and we are at the headquarters of Orient Cement, which is part of the CK Birla Group. Well, the question on the stock market's mind is, will Orient Cement finally deliver? After all, it's had the ingredients, but on a share price performance, it's been far from impressive. I'll give you a few details. The stock price currently is half of what it was at its peak in 2016. Not just that, on an EV per ton, it trades at less than $40 per ton. Now that's less than half of what replacement cost is of more than $100 per ton. And cement's capacity is close to around 8.5 million tons odd. Not just that, well, it's boasted of some of the biggest names in the industry. Till lately, we had late Mr. Rakesh Jhunjhunwala that had stake in the company. You have Mr. Bangur, who's part of Shree Cement, who has more than a % stake in the company. And the institutional holding as well has been high at more than 15% odd. Well, the problem is that the capacity is 8.5 million tons. But on terms of sales volumes, they haven't been able to scale up. They've not even scaled up to around 75% in the last few years or so. Their sales mix, well, majority of it is in South as well as West India, and the remaining 10% is distributed in the other parts of the country. Moving to their financial performance, well, they were clocking closer to 100 crores per quarter. That's an EBITDA per quarter performance. However, in the middle of last year, they took a hard knock on the financial performance. The good news is quarter 3 was better than quarter 2, and quarter 4 should be even better than quarter 3. Well, normally you track the EBITDA per ton, and they used to clock closer to 900 to around 1,000 rupees per ton. However, that number has come down to closer around 600 to 650 rupees per ton, as cement prices haven't moved up that much and input costs have spiked up as well. On the debt front, well, you need to give it to them. They've deleveraged their balance sheet. It was more than 1,000 crores a few quarters ago, and that's come down to around 400 crores. This we're talking about the total debt, short-term as well as long-term debt. Well, without wasting any more time, let's get straight to the management and let's focus on what is the capacity expansion plans that they have, what kind of sales volumes growth can they deliver from here on, and what's their take on inorganic growth. Well, to understand that and more, let's get straight to Mr. Deepak Khetrapal, the MD and CEO of the company, who's standing by. Well, thank you so much, Mr. Khetrapal, for speaking to us here at CNBC-TV18. Well, we want to talk a lot about the company and whether or not there is value in Orient Cement, because that's the question that shareholders are asking. But before we get to that, let's talk about the industry first. Cement demand reportedly has been very, very strong in this fourth quarter for bulk of it. So give us a sense in terms of demand. How has it panned out for the industry in quarter 4? And more importantly, why didn't prices move? When demand is rock solid, prices didn't improve that much.
Thank you, Nigel. Thanks first for making it all the way to come and meet me here. The industry, when you talk about the demand being very, very strong, the fact is January and February, I think the entire industry, we saw a lot of momentum, and we were thinking, this momentum will continue till at least end of the year, if not till June or so that we expect. Surprisingly, after a very strong Jan-Feb, I think we are seeing some headwinds in the demand for the entire industry almost across the markets, even in the markets where we don't operate. And my own guess at this while is that for the month of March, we may actually see a degrowth over last year.
Oh.
So it's a little bit of a surprise to all of us. Post-Holi, when we expected the demand will just keep moving up and up and up, that's not happened.
Okay, and what about pricing?
The pricing has been actually below par.
But the hope is that in the new fiscal year, that's from April onwards, there is a likelihood that maybe a price increase can be pushed through in select parts of the country. What's your sense on that? That price increase is coming about in early April And will it sustain?
Prices need to go up just to recover at least partially also the fuel costs. So not that we have not tried to increase our prices, we have. But in the face of competition, when cement is being sold by other brands at a lower price, then the prices come down. So right now also I'm just hoping that just to stay, I would say, robust in terms of the business that we do, we will need some price increases, and we are hoping that the people who are incurring the same costs, actually they're incurring higher costs than us, that they also have a need to recover the extra cost from the market and increase the price.
Well, you're basically in South as well as in West India. What kind of a price increase can you push through?
To my mind, the South India actually has been very, very low in the recent past. In southern market, I would be quite honestly looking for a price increase of as much as 40 to 50 rupees a bag. Okay. Like, that's my wish now. Yeah. I'm not saying it's going to happen.
We'll have to see how much of that gets absorbed.
That's my wish. First of all, how much it goes up and how much of that can get absorbed by the market. So that's a bit of an open question. Yes. Hopefully in the first half of April, we'll get to see the reality as it is emerging.
Right.
And if first half of April, we can see that some sensibility, some sense is there in the market, and for people to say, hey guys, if our costs have gone up, we need to pass that on. Yeah. If that happens, then we will obviously be happy and be more in a position to take a more bullish calls on the markets as we need to do for capacity expansion and incurring more capex and things, right?
In a pre-election year, for the industry, what kind of cement demand are you anticipating?
We obviously election year every year we've seen it's a cycle where capex goes up from the government side. They want to finish the projects which are pending. So my own guess is, and this is now I'm talking to markets, my feeling was that the demand should go up at least by 12%. But the industry consensus, when I'm talking to our colleagues in the industry, people are saying it might be close to 10 than 12.
No, they're talking about pricing then. What's in your hands is maybe you can improve the mix a little bit.
Oh, absolutely.
You know, so
absolutely.
Premium sales, I think they're mid-teens for you. You can give us an updated number. But premium sales as a percentage of your total mix, what is it? Where is it headed? And tell us, what is the price difference?
I think that's something in which we take immense amount of pride with the emerging brand portfolio that we have created. We launched Strongcrete a little over 4 years ago, as everybody knows. And despite it being priced at as much as 45 rupees higher than my PPC, it's been absorbed in the market, it's been liked by the people, and whenever we've seen the price, let's say, lack of price strength not sort of helping us, Strongcrete has been our savior. Right. And at this price point, in less than 4 years, to gain 15% of the B2C market, I think we have reasons to be very, very delighted. To complete our story, we very recently have launched what we call an environmentally responsible cement. We are actually calling it the responsible cement for the responsible you. It's for the consumer who also needs to be responsible when we are being responsible. So that is, we are calling it Orient Green. Okay. You asked about pricing points. So today, Strongcrete is priced at 45 rupees plus my normal PPC. My premium sale out of my total sales should reach close to 30%. 30%. And currently, premium sales as a percentage of 15. Your total sales is around... No, of the total sales, it's about 7%. Just to get it right, B2B and B2C, currently it's almost 50-50. Absolutely, yes. Traditionally, we were actually doing a lot more of B2C. Right. We used to be 60% plus there. But in the last financial year, especially in the latter part of the year, we are seeing that the B2C market, for some reason, is not where it was expected to be.
Well, Mr. Khetrapal, you briefly mentioned about being a low-cost cement producer. My question to you is, what is the incremental levels you have from here on? I believe that you're coming up with the WHRS facility in a couple of your units. So tell us more about that, the incremental levels that you have as of now, and also what kind of savings can these levers bring about, for the WHRS, quantify it.
See, as you yourself said, we are the lowest cost producer, or at least the most efficient producer of cement in India. So the levers that we are looking forward to now are obviously things that we have not invested in the past, which includes, most importantly, the waste heat recovery systems, right? A 10 megawatt waste heat recovery system is just about to be commissioned in a few weeks from today. The 10 megawatt capacity that we are putting up in waste heat recovery straight away gives me an annual benefit in rupees crores, about between 30 and 36 crores rupees a year, right? With an investment of barely 100 crores. So it's a very good return on investment, plus it helps us save fossil fuel for generating power. We also have plans to add at the existing capacities total of another 22 megawatts of waste heat recovery. And obviously, if you extrapolate the numbers I've spoken to you just now, it's more than 100 crores, which will come as savings purely from the investment into waste heat recovery plant. Between 100 and 110 crores rupees per year is the benefit that we do expect to come from our total investment into 32 megawatts of waste heat recovery.
And this will fully be reflected in FY25?
No, the first 10 megawatt, which is going to be commissioned soon, which will be reflected for about 10 months in FY24, for 10 months, which definitely will be reflected.
So that's around 25 crores?
30 crores, if a year we take, we are going to be doing it for 10 months.
Yeah, so around 25 crores. 25 crores Absolutely. Is what you'll save. And the remainder, the 20 megawatt hour that you're talking about, that comes on stream in which year?
That comes in stream with the expansion that we do both at Chitapur, and that's actually linked with our capacity expansion.
For FY24, what kind of a volume growth number are you looking at, given that the industry could grow by around 10 to around 12%? And also the EBITDA per ton, Mr. Khetrapal, well, I was used to be, looking at your numbers, it used to be 1,000 rupees per ton. Then industry dynamics changed. In fact, mid of last year, you took a hard knockout there. But you're back in that vicinity of around 6 to around 700 rupees per ton. So what kind of an EBITDA per ton number you're looking at current reckoning?
The consensus is that the industry is expecting a growth of up to about 10%. They're saying 8, 9, 10 in that range. To my mind, and given the past, I would say, we've seen the traction in the markets in the election year, I would expect it to be around 12%. And given whatever rate the industry grows, on which I can only make my own impression known to you, my own guess will be 2 to 3% plus whatever the industry growth is.
All right.
So if the industry growth is 10, we'll be between 12 and 13. If the industry is at 12, we should be in 14, 15.
Right.
That's how we would look at it.
And the EBITDA per ton?
EBITDA per ton, again, Nigel, it's as you said, if the prices improve, it's a different story. But even at the current prices, with the fuel prices which have softened up to a point, I would expect if we this year finish 600 rupees odd, only from our savings in waste heat recovery and increasing premiumization and a little bit of, I would say, the softening in coal prices further, my expectation is 200, 250 rupees per ton should get added purely because of this initiative.
So as of now, around 800 to 850 rupees should be the likely scenario, going by what we have on the table as of now.
The pricing points.
What is the expansion plan from here on? If you could tell us, is it going to be greenfield? Is it going to be brownfield? Because you have that mine in Rajasthan as well. Right. So what is the plan as of now? And more importantly, by when are you going to be announcing it?
So in terms of expansion plans today that we are working on, which we would be presenting initially to our board, and obviously thereafter, if required, we'll talk to the shareholders as well if the board agrees to expansion plan. But the fact today is we have enough limestone reserves and enough of rest of the comfort in the markets to be able to look at a total capacity of 18 million tons, a little more than that also. The plans, what we need to still figure out is how quickly can we pursue these plans, right? Because if we want to do it in a hurry, we can do that, but obviously it needs investments, chunked investment, right? If I'm talking about another 10 million tons or 9.5 million tons being added, you can imagine we are talking about an investment which is 7,000 crore rupees or thereabouts ballpark, right? And just to remind you, a few years ago, soon after we had commissioned the Chitapur plant in Gulbarga, Karnataka, we actually had made a bid for some of the capacity in organic acquisition we're going for. To our mind, it looked like a wonderful fit, and we were very, very bullish about it. Some shareholders, large shareholders, not the promoter group, they didn't like it, and that's the time I think somewhere we stopped being so-called the favorites of the share market.
But a realistic target would be by 2025 from 8.5 million tons, where does Orient Cement's capacity go to?
In 2 years, I'll be honest, we would be able to add 3 million tons. So from current 8.5 to 11.5 million tons by end of FY25. It can only happen through brownfield expansion, where we have a choice of either doing the capacity expansion at our Devapur plant in Telangana or the newer plant, relatively newer plant, which we set up in Chitapur and Gulbarga. But given the demand-supply dynamics, Today we need to perhaps make a pivot to first set up additional capacity at Chhatrapal.
Well, Mr. Khetrapal, what's the vision for the company? Say with a 5-year perspective, you told us the potential that you can add in terms of capacity. Tell us more about that. What about diversification from your core markets, which is West as well as South?
So, when we say vision of the company, we actually call vision something else, not just a goal of, that could be a mission saying so many millions by a certain year. So vision remains built sustainably. Those are the two words that we use for our vision. Coming to capacity expansion, I think in the 5 to 6 years period that we speak of, we see ourselves with a total capacity about 18 million tons, with diversification in the markets away from South and West where we are largely present. But if we had the opportunity, and obviously Rajasthan mines give us that opportunity to go to Rajasthan with the capacity being created, which allows us to address markets in the northern India, which overall, given the demand-supply mismatch not being as severe as is there in South, would be a good diversification for us.
If you're going to go in for a big capacity expansion, will you be doing a rights issue? Will there be some equity raise involved in it? Point number one. And point number two, if the company is so attractively valued, why doesn't the promoter entity increase their stake from around that 37-38% odd?
Well, Nigel, when you speak about the equity infusion, it's a function of how quickly we add capacity, right? Because so far in the market, we have been telling investors that we will be doing in a phased manner. We'll be doing 3 million plus 3 million, and then the Rajasthan capacity now we are saying it will be 3 million plus. If we do it in phased manner, we don't need equity infusion.
Yeah.
But capacity expansion will be slower then. Only if we want to expand the capacity in a quick manner, then obviously we need to bolster the net worth of the company so that our debt equity, our debt servicing ratios don't go haywire. So it's a function of timing and the growth at pace, what pace we want to do it. Second, when it comes to the question of the promoters, I think that question is best asked to the promoters. They manage their own capital allocation. I have no control on it.
Okay, final question then before we let you go. I wanted your view on inorganic growth. First of all, is Orient Cement on the block? There's some part of the street that is still a little bit confused, so I need to ask you that question. And the second part is, will you look at inorganic growth?
I don't know what street is confused about, because we are not in talks with anyone at all. Nobody has approached us. Nobody is talking to us. If the street believes so, you have to ask the street. I can't clarify that based on why the street is confused, because there's no indication at all that I have or anybody that we know of. We are not in touch with anybody. Nobody's in touch with us.
Okay.
That's all I can tell you.
And what about your view on inorganic growth then? You're not on the block, but are you looking at others on the block?
Quite honestly, we are not.
It's been a pleasure talking to Mr. Khetrapal. Thanks so much for speaking to us here on CNBC-TV18.
Thank you.
All right, that was a deep dive into Orient Cement, but time to slip into a short break. We'll come back with another interesting stock. EPL is in the spotlight on the other side.
We protect